Hello everybody, Brian here from quantlabs.net. Just wanted to go over with you looking at the reports for Oanda forex. This is very useful for a lot of people. So we're just going to look at these Excel and Word documents. I have done videos for both same for Kraken, for crypto, and also CFDs with Oanda. This is more for analysis. I would not recommend purchasing or doing orders with CFD, but for sure with forex here. There's certain ones you can and cannot do, just depends upon the spread, and I'll probably have some other videos to show those for you. So this is known as the FX rank. This is generated every hour. This file has how many pairs? Pretty well all the pairs that Oanda supports, so 60 plus it looks like. Depending upon the type of trading strategies, bots I like to use, I'm only doing, I think 14 out of the big ones that have access to the order book, but these are just for general research and just general viewing if you are interested in any of these other big pairs regardless of the spread or not. So what we can typically do is we can measure the performance based upon slope or momentum, just as a start. So I just do a sort on the appropriate column. So N being the slope, doing descending. Again, I know people will say, "Oh, there's a better way to do that." Yes, I'm aware of that. Thank you, but this is how I do it. Anyways, here's the slope. So this will tell you who's been having the highest performing. The Euro Huff, followed by the USD INR. And then the Euro, Turkish Lira, USD, Turkish Lira, and then the European Swedish Krone. But a lot of these have a very high cost in terms of spread. Now, I have been told that there are opportunities out there overnight, my time, from New York Eastern Standard Time, where these spreads do tighten. And because of the trading desks, they do tighten to allow those countries to buy and sell in other currencies. So we did a slope sort here. So let's do by momentum, which is column J. Yeah, column J. So same thing. And again, I want to show you something that I find quite unusual with the Oanda data. So here, momentum, U.S. Canadian, U.S. Chinese yuan. I've noticed that since the trade war started. Euro, Turkish lira. This is a proxy trade here. The Australian Japanese yen. Those have been performing fairly well. So we'll just leave it at that for the top four. Sometimes you may want to know who has the least volatility. You can do that by sorting on the least of the standard deviation, column 10. So here we will do ascending column K, which is standard deviation. And here you go. Here's the least volatile. So least volatile, it looks like, is USD SAR, Euro, Danish, Euro, Czech, Euro Huff, and then the USD Chinese yuan. That's surprising, actually, for the volatility to be fairly low. And lastly, we'll just trade on volume. This is something I think you should be aware of with Oanda. So, let me just reset where we were. So our volume's on column I. Let's do that. Gotta set this to ascending. So based upon volume, here you go. So this is quite interesting. Most traded Euro, Swedish Krone. That's a pure safety trade for sure. Same with this. So the Swedish Krone, it looks like or this is a Scandinavian as a safety trade based upon volume. USD Rand, Pound Rand, Euro Rand, and then the Swiss franc Rand. These are highly traded, but you'll see here that all the big ones you think, like for instance, you'll see all these other bigger combos are just not seeing the volume That is absolutely crazy. Look at, for instance, Euro, Australian dollar, 49 out of 64 pairs, that ranking. USD Canadian, 44 out of 64 plus pairs. Those are really low, but the volume is in those ones I mentioned. And I think those are because those currencies, the base currencies, ones have a more credible story outside of the rand and the Turkish lira. I can't explain it, but there you go. So I want to show you that that's where the volume is. That's probably where hot capital is going as well. I just can't explain it. It makes sense, but from a spread cost, it's just so inhibitive to actually trade that through a Wanda. Anyways, let's go to the reports. So we have here 4 reports. Let's look at the short first. If you see a size of around 36, that means there's no data. But usually with forex, there's a lot of activity, a lot of data to work from, so you shouldn't see that. Unlike in crypto or CFD, you'll see a lot of it in CFD for sure, because there's no activity. But here in the world of crypto, or sorry, forex, you should see it. So here we have a shorting opportunity potentially with the euro check. And you can see here, unlike one of 2 of the coins in crypto, they don't have all these false positive up signals, buy signals. Here, so this is the euro. So hold on, this is the short. So it's screaming that there's a short opportunity with euro franc. So you can see it's been uptrend, below trend right now. It's at the border of the upper limit of the golden cross, which is a valuable time to buy. So maybe this is a short. You can see here evenly distributed with the daily returns. Here we have a bullish crab, a bullish harmonic. So this is where they contradict each other. Again, detected a bearish. So this will cancel each other out, the bearish and bullish harmonics. I just wouldn't even pay attention to it. Here's some activity, 4 bullish candles. One for, no, these are wrong. Looks like something's happening because it's consolidating between the moving averages. So it may actually push lower. And yeah, there's definitely consolidation. You can see it. But here's the price. Not a lot of moves, but we're looking for downward momentum. Just don't see it. So we have here our RSI momentum in the overall moving price over a 180-day, 90-day, and 30-day. So it's really been tightened up here. Euro checking now. Wow, this to me is clearly manipulated, or there's not enough liquidity or volume, or just stays flat, picks up a little bit. But yeah, that range right there is just not enough either volume. I don't think it's manipulated, but it is funny looking. Downtrend. Yeah, it's undervalued. The Fibonacci levels. Definitely more negative moves on that distribution. Bullish butterfly. Wouldn't even pay attention to that. This automated head and shoulder. That's the expected move right here if it does get up to there on the green dot. Again, more pattern bullish. So a bullish pattern. Yeah, these times are clearly screwed up. Yeah, so it's just flattening out on the bottom side. So yeah, it's probably going to start to tumble, this one. All right, so let's look at some more better reports. Let's look at this one, just the raw long. So just so you know that there's also filter based on trend and volume as well. So this, it doesn't care, it just will list anything. So Here, how many pairs we got? We got 4 pairs. Again, in this kind of report, really important to understand this, is I provide among those 4 here the group mean, the volume mean, and the volatility mean. So you can compare each other against the group, see which one's more volatile or which one has higher volume. So once again, this is one of those scenarios where just ignore these entry signals or buy signals. Clearly flat, below trend, below the Fibonacci level. And this is the Swiss franc and Hong Kong dollar. Will this move? I don't know. Bullish butterfly. Okay. Now we have a bearish harmonic. So I'd say those cancel each other out. Head and shoulder again. Blue dot means expected move down, and this is the green dot represents the move up. So we have here the time is a bullish signal, bullish candle. Here's the 180, 90-day view, and the 30-day view. So it has had a nice little run up, still negative momentum. Euro US dollar. Let's check this out. All these false positive. Upward trend, but below trend historically. It's within the zone. Evenly split. Evenly split on the daily returns for the Euro US dollar. Bullish, harmonic, okay. Do we have a bearish? Yeah, we have a bearish. Cancels out. Head and shoulders. The trend down. Now, just so you know, when it comes to the actual strategies, they'll give you better analysis, short-term analysis, using the short-term Fibonacci levels, as well as some of the mean reverting stuff as well. Because through that I analyze the shorts versus longs, so that's very helpful. But lately, you can see it's been on a run. Last this is 4, 5, 8, 9 days. So there you go. Will it be sustainable? I don't know. So again, this is based just raw long. So I'm going to stop it there and look at the other 2 reports. I just like to look at usually no more than top 3, but usually top 2. So we'll look at the ones based upon volume. So this is volume. Let me show you what's in there. So the volume has to be more than 225,000, which these ones meet. Once again, we have the group mean, volume mean, and the volatility mean. You can compare these single ones. So for instance, the British New Zealand is lower than the volatility of the group. The volume is not as high as the average or group mean, but it is. This one may be useful because it's within the golden range of that Fibonacci levels. So here we go. Historically, it's been pretty flat, downtrend but above trend. Again, look at this. It doesn't move a lot, but it is within that range. That was the golden range. So here, definitely have more positive returns. That's a good thing. A bullish butterfly, that's fine. Bearish again, that's too bad. It cancels each other out. Let's see. So we have a bunch of 4 bullish candle patterns, and they are again. Just as an example, you can look these up using a site called the pattern site. So this is it here. So if I go to just do a Google the pattern site and get the name of that candle. So just as an example, I looked at this 3. Maybe this one, inverted hammer. See what it pulls up. And this can be useful. Give you a rating. Gives you a rating of what reliable candle patterns are out there. Yeah, this one we want. Inverted hammer. So this will give you a ranking, overall performance. So that's a pretty good one. Frequency doesn't happen a lot. So this could be a reliable pattern or candle. So if you see that, that might be a nice signal for this signal right here. But again, it's been very flat, range bound, but there has been some nice moves up that you could have taken advantage of. So who knows, maybe some of these candles might have been anywhere along here to predict these large moves up. Next pair we have the British pound against the Australian dollar, again within the Fibonacci range. I believe it's under volatility is pretty low, lower volume for this pair. Again, you got to watch out for these false buy signals above the historical trend, which is down. Very tight again in that range. And this one has more negative daily returns. Got a bullish pattern here, harmonic that is. And again, oh no, so this might be okay because there's no bearish one. So there we have a head and shoulder here. So here we have two bullish signals. And again, we can look up these particular ones for the reliability of them. And here's a 180-day view, the 90-day and 30-day. Again, this is fairly flat. I wouldn't be too excited with this pair. But maybe there might be something better to look at in the other report. So we looked at based on volume, so now we're going to look at based on trend. This might be more useful. Okay, once again, the same format. You can see that the date was generated not too long ago, maybe 4 hours ago. These will be updated every hour. So this is our selection here. So here is not the U.S. Japanese yen, not within that golden range, but here's a very interesting signal. We're not seeing any of these fake or false positive buy signals. We haven't seen a sell signal along this run up, so you know it could be a situation like this to here. So there is some low probability of this being valid, but again, the price is just, there's no movement in the price, just too tight. That would tell me it's evenly split between the daily returns. Bearish signal, bearish, that's a bearish harmonic, head and shoulder again. We have here a bullish matching low candle. Again, 180 view, 90-day view. There's just no movement. You'd have to use a lot of leverage to get anything. That could be pretty risky to do. Okay, our next pair here, we're looking at Singapore against the Japanese yen. Very low volatility, lower volume than normal, within our range of value. But again, it's been very, very little opportunity of movement here. Very tight. People have been complaining of lack of volatility, and I could see why in these kind of pairs. You can't even trade this. It's just been flat this long. Okay, evenly split on the daily returns. Bullish bat. Here it is. Now we have a bearish. Cancel those out. We have a head and shoulder. Fine, 3-day bullish signal on a candle. Again, you can look this up for reliability on the patternsite.com. Wow, but here's an interesting pattern here. We got this wick on this extreme down move that has somewhat trended up. So you can look for these very long wicks right here. And that was a buying signal, classic buying signal. People piled in and drove up the price over that time period. That was from January till March for 2 months. Classic up. Yeah. So I don't know. Nothing exciting here. Sorry, folks. But I'm sure with a pair trading strategy, we'll find something. Hopefully, somebody found some use out of this, but that's how to do and use the reports. Other than that, we shall talk to you later.